So we mentioned the term IPO a couple of times already, initial public offering, the first time that a company offers shares of its company to the public. Now, before this happens, you might hear of private investors. So say that you're a company raising money. In the early stages, of course, this is going to be less money, and it could be via a private investor, it could be via a bank, it could be via a family member. But later down the line, especially if your company gets really, really big, an efficient way to raise large amounts of capital is an IPO. So selling parts of your company to the general public and then listing your stock on a stock market. That is where eventually stocks end up and then stocks become tradable. But I want to briefly circle back for this lesson to the cryptocurrency market lesson, because there's something very interesting that happened I think it started in 2016 or 17, but that's the ICO, the initial coin offering. And this has all to do with cryptocurrencies and tokens that live on blockchain. So I think I briefly discussed that there's the Bitcoin blockchain and the Bitcoin currency, let's call it the currency, but there's also the Ethereum blockchain with the Ethereum token. And what's interesting here is that there is a standard developed that gives companies the possibility to create their own tokens on top of the Ethereum blockchain. There's a standard for this, and the tokens are called ERC20 tokens. That's something you don't necessarily need to remember in order to understand how an ICO works. But remember that it's a token that you can launch on top of the Ethereum blockchain. And of course, for companies, this is a way to raise capital. And this was done with obscene amounts in a very short amount of time, especially in 2017. So you have a company and you can create your token on the blockchain, decentralized blockchain in this case. And one of the funny characteristics of this is that it was a lot more accessible than, for example, an IPO. In this case, you could create a wallet address that has some balance, say Ether tokens in this case, just like you would have an email address, and you could send your balance to another email address, another wallet address, and via smart contracts, so remember smart contract, if A, then B, you would receive the tokens. And only if the smart contract had verified that you actually send your funds. So this is a whole new way of raising capital, and it happened in a much more decentralized way. I hope I explained that well. If you have any questions or if this was a little bit fast, maybe please ask them. It's kind of important to know about ICOs because it's more of the direction that we're heading into when it comes to raising capital in a more decentralized way and in a more crowdfunding type of way. Last but not least, the IEO, the initial exchange offering, quite similar to the previous two, but this is done via cryptocurrency exchanges. FTX did one recently where they launched the Serum token. It's a token for a decentralized exchange, and you could participate in this IEO by creating an account on the FTX exchange, and you could place bids that you wanted to pay for this token, and if you were one of the lucky few, you would actually get these new tokens. So let's look at some characteristics because not everything is the same. Let's do so by some slides. And then round this session up, and you can check the literature and the video as usual. So characteristics of the IPO, generally not very accessible. You need to go, well, at least as a retail investor, you need to go through a broker, and there's often a limited supply available to retail investors via brokers. So it might be that an IPO is very popular, a lot of people want to participate, and you need to subscribe that an IPO becomes oversubscribed. In that case, of course, you might miss out. Benefits though are they are regulated and you really get a share in a company. There's tons of regulation in place to make sure that nobody loses out and everybody plays the same fair game. And as mentioned, eventually companies via IPO will list on the stock exchange where if you participated in the IPO, you could, for example, sell your shares there. ICOs are quite different, more decentralized, often unregulated or at least less regulated, and that brings, of course, risk. I notice that I'm moving from the bottom bullet to the top. Never mind. They are a little bit riskier, and the big difference here between ICOs and IPOs is that often via an ICO you buy tokens, and this might be token with a certain functionality, but almost never do they give you ownership in a company. And that is a super important thing to remember, so that it makes your investment a lot riskier. And it's down to speculation what this investment is worth. It doesn't give you any right to dividends usually. So all in all, that is something to pay attention to. That makes it risky. As mentioned, so the final bullet on top, accessible via smart contracts. Look up how smart contracts work. It is a very efficient way of doing transactions. If this, then that, and the contract executes only if all conditions of the contract are met. Last up, initial exchange offerings. Look at the FTX example. There's a lot of documentation available. I will point you in the direction via Slack if you want to know more about it. But for now, remember that they are, accessible via the exchange, and also often they are quite unregulated. That depends a little bit on the exchange. That's it for IPOs and ICOs and IEOs. I hope this is clear. Short overview again. Do your own research on this. Fascinating topic. Definitely look into blockchain technology and how the IPO might change in the future towards something more decentralized. I will see you in the next lesson where we will talk about creating an investment portfolio and we'll look at baskets and sectors.